Hi, and welcome back to your daily market podcast. My name is MaryKlaire Pelk, and I am the host. I'm also the director of operations for the GCU Finance and Econ Club. I'm here with Charlie Hurst and our special guest, Patrick Klasa. Why don't you go ahead and give us a quick introduction, guys?
Yeah, I'm Charlie Hurst. I am also a director of operations, and I'm a freshman here at GCU.
Uh, Hi, I am an associate for the relationship management team in the Finance and Econ Club. I'm also co-sector head in the Student Managed Investment Fund here, as well as a senior analyst as part of the ETF.
Awesome. So I hear that you're part of the ETF here. I've heard a lot of news with that, especially with the recent drop of the Faith Income ETF. Why don't you tell us a little bit about that?
So FTHB is a faith-based ETF that GCU has released, partnered with Astrozoa. Released, I think it was 2 Wednesdays ago, and it's been great. The release was great. Yeah.
Awesome. Glad to hear. I always saw you guys working so hard on that, so I'm glad that it's finally able to come to fruition of what you guys have been working so hard on. Anyways, today we will be going over the numbers as per usual, as well as our topic for today, which is investing and saving and when to do both of those things specifically for college students. So taking a look at the numbers today, it looks like we were pretty in the green. The S&P was up 2.91%, the Dow was up 2.49%, NASDAQ was up 3.83%, and the faith-based income ETF was up 0.41%. So overall, we had a very great day in the markets today, but let's talk about why that happened.
Yeah, so obviously many stocks, especially in the technology sector like NVIDIA, it was up almost 6% today. Apple and Microsoft were both up pretty nicely overall as well. I think that came after the talks about Trump, President Trump. He was talking about how the war with Iran is starting to slow down and they're ready to start negotiating. And obviously this is a short-term time frame thing, so it's a pretty, what would you say? Pretty, the word? Monumental
Yeah.
day for the markets, but it's not a long-term thing. This is just an over-exaggeration for the day. And I think that overall it's something that it's just an exaggeration overall.
But it is still very good to be seeing green for the first time in a while.
Yeah.
I don't know how you guys feel, but I definitely saw that in my portfolio today, and it felt good. That's for sure. Let's talk about other things in the global picture right now. There's many moves in that war with Iran. Lots of headlines flying around. What did you guys see today?
I think it's great that, Trump is willing to negotiate to try to end this conflict. Seeing green was, pretty hopeful. Like, oh,
Yeah.
hopefully that trend keeps up. Yeah.
I think a lot of it has to follow. I don't know if my pronunciation's gonna be correct, but the Strait of Hormuz. I don't know how to say it, but a lot of that has to do with the negotiations. President Trump tweeted on Truth Social about how other countries need to step in and claim their oil back, or they need to buy it from the U.S. To help with their economies overall, because obviously oil prices are up so much because of it.
Yeah. And whenever things like this happen, there's a lot of volatility in the market, as we've always seen. And this creates a lot of risks for us, but it also creates a lot of opportunities. And things that we've been talking about a little bit is the shift in sectors, which we've also seen. Do you want to talk about which ones that personally we've been watching to maybe you might expect to be watching more in the future based on this global picture we're seeing?
Yeah, for me personally, I find the military very interesting and fascinating. So when we saw the drone footage of the U.S. when they were dropping missiles on Iran through the drones, I found that really fascinating. And I think we're seeing a lot of the technology that we haven't seen over the past 20 or 10, 20 years because we haven't had many conflicts. And now we're starting to use it. And I think there's so much room for the defense sector to grow based on the technology and how we're using AI to incorporate with our military.
Yeah, I mean, I'd have to agree. The tech sector is really one to be looking at right now, although it's down right now. Yeah,
Yeah, the
lot
tech and defense as well are the ones to look at.
for sure.
There's lots of opportunities in the energy sector as well. I know we've talked about that quite a bit, especially with all of the changes in oil prices and everything like that has been so all over the place. There's been lots of change there, and it's something to note and watch yourself. Obviously, as a viewer, make your own decisions. Don't take anything we say as financial advice. We are not experts, but this is just our recommendations and things that we are looking at. Speaking of investing, specifically as college students, that brings us on to our topic for today, which is savings versus investing and when to do both of those as a college student. So, what would you guys say students should keep in their savings?
I wouldn't say there's an exact number, but when you get your paycheck from your job, I would always say put an amount towards your savings account, because at the end of the day, you're going to want to have, I personally like to have different savings accounts. So like I'll name them car, future, like house or something. That way I know what I'm putting my money towards, and it's a good visual thing. So you can spread your money out towards things you're saving up for in the future. I think that's something really beneficial.
What about you, Patrick?
Me personally, I like to keep a little bit of money aside just for things I want to buy, throughout the month. But to be honest, put most of my money in investments. Just because you're not getting that interest if it's in saving. I mean, you are making a very small amount of money, but if you're not planning on doing anything with this money, I personally put in my investment account.
Yeah.
And I only really save if I'm saving up for something specific.
But when it comes to saving, we know that not all savings accounts are the same, right? You have regular savings accounts, you even have like checking accounts, then there's also high yield savings accounts. So do you want to touch on the differences between those?
Yeah, so a checking account is not going to earn you any interest. A savings account, the average is about 3.25% per year. And then a high yield, I'm not sure what the percent on that is, but that's more of like an investment type of thing. And if you're putting your money into a high yield.
So when it comes to investing, we've talked about this before of how to start investing and where students can go to do those sort of things. Do you have any recommendations, Patrick?
Recommendations from me is if you're not really into investing, if you're not too sure what you're doing, just put into something really safe. Or if you want to do individual stocks, just do stocks that you know. That's advice that I get all the time. Only invest in companies that you know. Like, you go to Target, oh, let's look at the Target stock or the Walmart stock. Yeah, obviously I would recommend, anything fixed income since that's kind of my realm. But I know some people like to stay away from that. So
why don't you talk to us a little bit about what that is? Like, what do you mean by fixed income versus regular other stocks that people mostly think about when they think about getting started in investing?
So fixed income is most of the time seen as like bonds and more lower interest securities that are going to be more safe. So basically what a bond is you're a bank essentially for a company. Company needs to pay off their debt, so we are buying that debt to kind of help the company out.
And then the idea is that they give it back to you with a little bit of added interest as well, correct?
That's right.
Yeah. So obviously as college students, we are younger than those who may be getting started in investing in their 30s, even 40s. What advantage does that give to us?
Yeah, something I want to touch on from Patrick. He was talking about like individual stocks as well. If you're going to buy individual stocks, it's good not to just put it into only one sector. So he was talking about like Target and Walmart. Say you buy like Walmart stock, then maybe go buy a stock like NVIDIA, which is a completely different sector, then go buy something in energy, then go buy something in defense. Like, you got to diversify your portfolio, and it's good to have those really safe long-term stuff, and that's what you should be putting a majority of your money into, and then have play money on the side that you can go and put into individual stocks and money that you're okay with losing. But what was the question again? Sorry, I kind of got off script.
I believe we were talking about...
Oh, the advantages. Yeah,
Yes.
the advantages. Sorry.
The advantages for college students starting off versus people in their 30s or 40s.
Yeah.
I'd say a really big advantage for college students, if they are able to consistently save, they're able to set up a really healthy, good habit that will lead them into their 20s and going into their career, setting a little money aside to try to invest it and grow that portfolio. Yeah.
Definitely.
Yeah, something I talk about a lot on this podcast specifically, and I know we haven't plugged it yet, but we'll put a link for a financial calculator up on the screen somewhere. But that's a tool that I've used, and I know a lot of people in the finance world have used too. But it tells you if you put in a certain amount of money each month, how much money you'll have by this date, or say by you're 40, that's how much money you'll have if you invest it into something.
Yeah. You got to think about your investments kind of like a tree. Like, you plant the plant, you water it, and it's going to grow over time.
Yeah.
You might not see it immediately. Maybe it won't sprout up as soon as you expected it to. But the longer time that you have your money in the market, eventually it will flourish. And the advantage that we have as college students is time. We are young. We still have so much time to invest our money. It's going to go up and down, but as long as we ride out those highs and lows, eventually we will be able to see our portfolios grow overall.
Yeah, and that's where the idea of compound interest really comes in. So say you invest like $500 this year and you make, this is kind of out of proportion, but 10%. So now you're going to have $550 invested. So now you're going to be making more money the next year, and then the next year, and then the next year as it gets reinvested through compound interest.
Yeah. So a compound interest calculator is definitely a great tool to use. If you've never looked at one before, I would certainly recommend looking at one of those. You can find them easily online or use the link below to find one. But one other question that I had is, how do you recommend that college students balance short-term goals for saving, like spring break, rent, or car, with long-term investing goals such as like buying a house? I think you kind of touched on this with the separation of savings accounts, but how do you allocate how much to put in each of those accounts?
I think that's really more of something that you got to do a little bit of math for. So say you're saving up for a spring break trip and you need $500 for a plane ticket. Every week that you're getting your paycheck, say you get $1,000. Then you put $100 into that spring break fund, and then maybe you put $200 to that long-term one. It really comes down to being able to do like basic math and figuring out how much money you need to have for certain things by a certain date.
Yeah, I think just having a plan is a great way to do that. Obviously, it's different for each person, what their goals are, what they're saving up for. But yeah, having a good plan that makes sense and is realistic is definitely the way to go.
Yeah, definitely. Any other tips or advice for college students, mistakes to steer clear from?
Don't spend all your dining dollars.
That's a big one.
Yeah.
I'm already out.
Really?
Yeah, I'm out.
That's tough.
Yeah. I'd say probably a majority of students here on campus don't have jobs because GCU is a heavily out-of-state college. So you have a lot of people coming in, and not a lot of people are going to have cars to have a job. So when you have your job over summer, make sure you're not spending a ton of money over the summer and saving it for when you come to college, so then you have money to spend here.
Yeah, definitely. Yeah. Well, all right. Thank you, guys, and thank you for tuning in. This wraps up your Daily Market Podcast, and I hope you have something to take away.
Thank you.